All right, let me let some people in and we will get started. All right, cool. Well, welcome everyone. As let's see here, we'll get some people joining us. All right, so my name is Annabelle Pacheco. I am a real estate broker. I've been in business for about 24 years now, part of a global real estate company, eXp Realty, and have invested myself in multifamily and currently invested in multifamily through syndication with other groups. I host this call along with Paul Krause every week. And really the purpose of this call is to just bring multifamily information to those that are interested in getting involved in multifamily. This is also open to investors that are currently purchasing multifamily that possibly have a deal, that want to present this deal to people here on this group. I know for myself, I'm interested in investing in multifamily, and really this call is for that. It's just, you know what, if you've got deals, you want to connect with people, bring it. It's like just share that information with the group that's here, because there's people on this call that would be interested in investing. Hey ladies, how are you?
How are you doing, Annabelle?
We're great now.
All right, good. All right, cool. I'm just giving my short intro before I introduce you guys. So I encourage everyone on this call to ask questions. If you are, this is open. This is a safe place. Ask questions. There are professionals here that even if they don't have the answers, someone in this group will get you the answers. So it's a safe place. Please it's open to questions. I'm not selling anything. I'm not giving any kind of financial advice here. I'm just sharing my story. I'm sharing, whatever I've experienced in the multifamily space with all of you, in hopes that, maybe it inspires you to go out and do the same thing. And I think today's call, I've got some ladies here who I think will be very inspirational to those that are looking to get involved in multifamily. Just a little bit about myself. I have been in the real estate business for 20 plus years. I started, I've done about 100 rehabs and flips throughout my career. And I think that prepared me for multifamily. It was just easier, than doing one or two or three deals at a time, to just go in and hit 34 doors, at one time. And it's just so much more cost efficient. It was just so much more, it just made sense. And I think until you get yourself involved in it, you won't know you won't understand what I'm trying to, or my message, what I'm trying to convey. But it really did make sense. It made sense financially for us to go from single family to multifamily. What else here? Paul, I want to give you an opportunity to also, say a little bit about what you're currently doing, because you're very active right now in Chicago. So please.
Yeah, no, thank you. I'm excited to hear from Jen and Stacy, because I did get to see Jen and Stacy on a call about a year ago. I think it was about a year ago. And I thought it was really interesting. I thought they did a great job. I thought they were incredibly helpful in terms of really kind of breaking down the nuts and bolts of their process. So I'm excited to hear from them today. So thank you very much for being on Annabelle's call again. And my name is Paul Krause. I'm active in Chicago. I'm also active in Arizona. I've got a 40 plus unit that right now we've got under contract. We're getting ready to close in 2 weeks. Excited about that deal because we're already in that market. And really just, I shared my information in the chat. If anyone wants to reach out to me and talk more about multifamily deals, I'm active in California, Arizona, Chicago. I'm selling some of my buildings in Chicago because I bought some more buildings in Chicago that I want to pay for them with. So, I'm active, and I've been doing a lot of deals ever since Annabelle had really inspired me a couple years ago to kind of take that leap from single family to multifamily. So glad to be here, and would love to connect with anybody who's just got deals happening, and so that's my thing. And thanks for the intro, and really excited to hear from Jen and Stacy today.
Yes. Well, I'm flattered, Paul, that I inspired you. Jeez.
You did. So
You know what? And
what I needed, a kick in the butt.
well, I think I mean, these calls they seem maybe like they're not that important, but they really are. And they're important to the people that want to hear the message, right? That are actually here. And I'm glad I was able to inspire you, because I feel like that's the whole purpose for this call. I want to make this call grow. I know that, and full disclosure, I haven't been 100% committed to this multifamily call. And I have now made a true commitment to grow this call, because I do want to meet partners. I do want to invest in multifamily. And I think that this is going to give me an opportunity to meet investors, meet people that are coming across multifamily, and see firsthand, hey, do I like them? Am I going to want to invest with them? And vice versa. Do they like me? Do they want to invest with me? This is just a platform that I'm creating, maybe selfishly, but at the same time, open. I'm being very transparent and vulnerable to everybody, open for those that are looking to invest as well. So, you know what? I think that moving forward, I'm going to put so much more time into this and bring, some awesome guest speakers that can bring value to the call. And today, I know I have two amazing ladies, Jen and Stacy. They're killing it. They have put together something that I think is just awesome, and that a lot of investors or multifamily, investors that are maybe not 100%, like haven't done this enough and aren't 100% sure. Well, these ladies have the blueprint to actually making this happen. So welcome, Stacy, Jen. Well, welcome to the call. I'm excited.
Thanks, Annabelle.
Yeah, thank you for having us. We're excited to be here.
So tell us a little bit about what you guys are doing and how you guys can help someone that's really looking to get involved in multifamily.
Man, we have so much to share. So for those of you that don't know who we are, we've been investing in multifamily for over 20 years, and we've got a system where we do it remotely and we teach it to others. So been teaching other people how to do it since 2010, and we're active investors. And our most recent was a 96 unit in Kentucky in March that we closed on, that we're currently working to stabilize. And we also just launched a book telling and sharing with people how we do it. So we're kind of doing both of that right now. And the cool part about that is what the book does for us is it attracts people like you're trying to do that might want to do deals with us or bring money to the table when we find deals, and just build long-term partnerships. And it also helps other people because it's like an A through Z playbook on how to do what we do. Focusing specifically on 2 to 20 units is the starting point that we like to recommend for people to get started when they're getting into apartments. Hey, there's Maurice. What's up, Maurice? Speaking of one of our students, there's Maurice. So we have an academy where people usually spend about 3 years with us, year over year. They start off maybe getting duplexes, triplexes, and quads. And we teach them how to scale into an actual cash flowing portfolio strategically. So the first year, they're usually trying to go after the smaller rental properties, and then they graduate into apartments and eventually syndication. So that's pretty much us in a nutshell. I don't know if you want to add anything, but
I think you caught it.
Yeah.
I think you got it all.
Yeah, we've been doing it for a while, and we know that sometimes people investing in their backyard, it's not a viable strategy, especially right now with interest rates climbing, and really the prices have not seen a dip as much as we'd like to see given 10 consecutive interest rate hikes. So doing it remotely and getting in a market that actually works for you is probably the best thing.
That's awesome. Now, I you guys are frozen on my screen. I can hear you guys perfectly well. Can everybody else see them?
They just unfroze on my
Yes.
end. So, yeah, they had just unfroze at the very end,
Okay.
Annabelle, but the audio is working perfect.
Perfect. Okay.
Yeah.
Okay.
Okay.
We might need
Okay.
to, Annabelle, we might need to turn our video off. If that happens again, just let us know and that'll give us better. We have 6 kids downstairs streaming.
Oh, okay. You guys are not on video right now, right?
No, we are. So if you can't see us, I think I'll
Okay.
turn our video.
Yeah, before we get cut. Let's
Okay.
turn it
Yeah.
off.
All right. Well,
can-
welcome to our voices.
Yes, I can see you.
There's our smiling picture.
Yeah. Okay, good. So, you guys are active. You're currently active investing. You're teaching students how to invest. I guess you said what, under 20 doors? Really, that's kind of what you're focused
No. The book that we wrote is just focused on the like smaller
Oh, I see.
multifamily. The next book we do will be on a little bit like probably like on 20 to 50 units. It's just so that we're not trying to speak to the entire world with one book. It's like, well, if you're trying to get started, you're looking for 2 to 20 units, this is going to be a playbook. But no, we do and teach well, all levels. I think our largest acquisition was 419 units, but anyway, but yeah, the book was 2 to 20 units.
So tell us, like break down if you can for someone that's on here, because I know I've got a couple people here that are getting into the multifamily space. Currently, I know one here has a triplex that if she were to sell to grow, right? Like what would you guys advise? Like how does your program or how would your program help her grow from a triplex to maybe 10 or 15 doors?
Yeah. So I'll actually use an example of someone who's here because I just saw her pop on, Janice. And we've known Janice for a very long time, but she happens to also be in our program. And when she started with smaller units, 2 to 4 units, and then fairly quickly moved into apartment buildings. And she is actually one of our business partners in the 96 unit as well. So she's scaled up to almost 100 units in a single deal in the last year and a half.
Yeah, and now she's like at 170 plus doors or something like that.
Does that sound about right, Janice? She's like, yeah, you know.
Yeah, I think I'm at 282 or something like that.
Oh,
Okay, yeah.
Okay, well,
Wow.
you know, 282.
282.
Yeah, but to answer your question, Annabelle, when someone is going and they're starting with, even with any kind of rental, single family homes, triplex, and they're trying to move into apartment buildings, one of the things we always will tell people, everybody's journey is their own, but one of the things that I think is very helpful when you're going into larger and larger multifamily is the experience you gain along the way. So even if your first apartment deal is only 10 units, the learning curve is astounding. Like how much you learn in even just a 10 unit building is mind blowing. Just like it was probably mind blowing for that triplex. But all of the systems and the professionalism and the world-class operations and financing and sourcing and all of those things that you learned for the 10 unit, then when you go to do a 30 unit, there's not that much of a learning curve. It's a little bit different. It's actually not different. It's just the numbers are bigger. And then when you move into 50 units, then 100 units, etc., in my opinion, doing some of that stair stepping allows people to lay a very solid foundation that will make them be better at all of their future deals, as opposed to once in a while we meet someone who's like, oh, I don't want to bother with any of that. I want to just buy 100 units as my first deal. Well, that's fantastic and great. The only challenge with that is you miss a lot of the experiential, I don't know if that's a word.
It's a word.
Okay.
We can make it a word.
All right, sure. The experiential learning that goes along with it. Because it's one thing to learn something from a book or even from a coach or being trained. It's something entirely different to do it. And you learn at such a different level. So we always encourage our students, like, look, it's okay to start small. You don't have to stay small very long. I mean, Janice is a really good example of that. But take a minute and do a little bit of stair stepping so that you can actually bring yourself and your partners, because you're probably going to be raising capital, bring them a better version of you as an investor because of the experience you've got. But anyway, but going from 3 units, you don't have to sell a triplex.
Yep.
There's no reason to sell a triplex to get it. Keep it. Like keep that asset that's going to help you with your lenders. It's going to establish credibility. If there's that much equity in it, that would make that much difference. You could refinance it, potentially pull capital out, or instead of worrying about bringing all the capital, you find partners. And that's what, like Maurice, who's in our program, and Janice, who's in our program, that's one of the things that they've learned and leveraged for deals. Sometimes they're the ones putting up the capital. Sometimes they're the ones bringing the deal and not putting all the capital in, but bringing other people's capital in, but they get to continue scaling. So I don't necessarily recommend selling a triplex. That's an asset that...
No, I would keep a triplex. I would keep the triplex. I would look at options for refinancing that triplex and how could I take some of that money and put it down. And I think it would be appropriate to get into a 5 to 10 unit from that point and just get into the apartment world, because once you get into 5+ units, it's different.
Yeah.
And then you would have had a small residential multifamily with that triplex that's performing, and now you have credibility with the banks, as Stacy had mentioned, and go ahead and refi it. See what that option is. I'd like to look at options A, B, and C. So what would it look like if I refied it? What would it look like if I just actually raised all of the money from other people and did the deal together? And if I did a 5 to 10 unit apartment, what would that look like, knowing that it's going to be valued differently? And as I increase the NOI, I increase the value long term. So you have much more opportunity as you scale. But when you scale, go from 3 to, you want to try to double it, but so 3 to 6, but 5 to 10 unit apartment building would be the next best step. That's what I would recommend.
Very nice. So, I have a question for you, and since you've got students on here, how does an investor, when an investor asks you, do you have money invested in this deal that you're bringing to them, and let's say you don't have any money invested in it, how does that investor feel about giving you guys money to invest in that deal?
I can appreciate that question.
Such a good question.
That is a good question. They are going to feel more comfortable knowing you have skin in the game.
Hello, Maurice.
Certainly, if you,
Hello.
I can't. You'll have to mute him, Annabelle.
Yes.
I was going to mute him, but I can't.
Yeah. Okay. Go ahead.
Oh, Maurice, such a troublemaker. Just kidding. So certainly when you have capital that you can put up, you're really showing you're truly putting skin in the game. But if you're in a place where you just legitimately don't, how that person's going to feel is going to depend on their faith in you, belief in you, experience with you, how well do they know you. And that's going to be person by person. So generally, as a general statement, people will feel a lot more comfortable if they know, hey, if you totally screw this up, you're going down too. It's like, they're like, okay, well, at least we're on the same page. And if you've got nothing in it, then it becomes more of a character thing. Do they believe that no matter what, you're going to do the right thing? Because it's not about whether you have money in it or not. So I don't think we've ever done a deal that we didn't have capital in. So I'm trying to think.
In the beginning.
Oh, that's true. Early on.
This is why I like to recommend starting off smaller, is because when I first started, I had to go to friends, family, relatives, and it was for duplexes. It was much smaller in terms of seeking money to raise, and those folks are in your inner circle. That they know, like, and trust you, and they might be a little skeptical on whether or not you know what you're doing, but it's on a lower scale, right? And then as you continue to scale and you get into larger deals, then you can definitely get a lot more attention when you tell people, like for the 96 unit, when people asked us and we said, oh, we're going to put $200,000 of our own money into it, that got people to say, oh, okay. So you're willing to put that much money into it. It must be a viable deal. Then tell me about it. What do you think we're going to stub our toe on then? And that's different to scale into that number. And the conversations in the beginning are just very much a matter of, the first property you do, it's a Hail Mary. You're trying to prove yourself. So friends and family is how I did that. And I moved away from that by building credibility, deal over deal, and eventually getting into raising money. And you can get pretty creative. You can get very creative with either seller financing or how you're going to fund that deal or how you're going to raise that money. But the smaller you start, the lower the barrier to entry is for that. So that's why we preach it so hard.
That's true. That is the other big reason, aside from just the experience. Jen's right. Just the amount of capital you need to pull together is a much smaller amount, which is a lot more doable until you have a really big database of people that know, like, and trust you. Mm-hmm. So that you're right. And then it allows you also, because in multifamily world, it's so popular, or it's so common to hear I'd say particularly educators. I don't know if it's just educators, but to have people talk about, syndication, that's the way to go. And there's nothing wrong with syndication. We do syndication, but when we are teaching newer investors who are learning to scale up, we always recommend to them, like, look, syndication is awesome. We will teach it to you even. However, push it out to year 2, do a handful of deals as joint ventures where you have a couple of people, 2 to 4 people, ideally, maybe up to 5. The attorneys don't like to see you go over 5 partners in a JV in general, but keep them a little bit small. But if you're doing a deal where you need to raise, $1.5 million of capital, that's difficult to do with only 2 to 5 people. And that's, so if you're doing deals that don't require as much, like Liz and Rachel just got a 34 unit under contract. And so I was just chatting with them over text, and I was like, how much is your raise? Because I was curious whether they were stepping into syndication world. And they said our raise is $450,000. And I was like, okay, that's not that much. It's still, that's a big chunk, but it's not. You can do that with a JV with a handful of people that could put in $100,000 a piece.
Right.
So I was like, okay, cool. So I could tell they're going to probably run that as a joint venture, but when someone's getting started and they need to raise their first $50,000, that feels enormous to them.
Yeah.
But then you can probably do that with one person or 2 if you needed to. And then you're like, okay, I've done it. And now you can move up and go higher and higher. That's another big reason for the starting small. It just makes it more doable.
I think those are the key points for the person that owns the triplex trying to scale. Stick to those basics of start small, double your door count as you go, stair step it so you get the experience. Try and start with price points where the raise isn't so high. You can seek out friends and family and syndicate later. I think that, anybody who's in multifamily right now knows that Grant Cardone's in a little bit of a heat. And when he's going after doors like that, that's the message. It's go after door after door after door. Well, some of these loans, it's been 12 years of really great market conditions and things just steaming and everything's really great. And I guarantee you there's a lot of opportunity where people weren't underwriting those deals with a lot of wiggle room in their exit strategy given current interest rates. And now it's coming up on time to refi, right? So when we see people say, go, door count, don't get into that trap. That inertia will get you into a frenzy where you're just trying to go after doors, but you're not trying to manage the asset, and you can really get yourself into a world of hurt. In fact, right now, with the way the economy is and everything that's going on with interest rates, right now is the best time to learn multifamily investing at a keystroke level, the way and what strategies and tactics to pull now versus in a great economy. You're going to learn a lot more now doing it because you're going to have to get very creative. And then when, as everything rises back up, you're going to know what it's like to be very, very conservative, to say, for lack of a better term, on your underwriting, so that when things do rise, you make a ton of money. And if they don't rise, you at least don't lose money. So it's very critical that when you're in this type of economy, learning different strategies and implementing them appropriately actually makes you a better investor. And it's sad because I see a lot of investors kind of pausing and not wanting to get involved because it's not as easy as it was a year and a half ago. And it's not, nor will it be for another 3 years. But you can't just sit around for 3 years. Inflation will kick your ass. Yeah.
So Jen, Stacy, that was great. You mentioned something that in your bullet points of different parts of the process, you mentioned, the location, and some of the people on the call that maybe haven't made an outside of the neighborhood or an outside of the farm investment before would probably be curious to know a little bit more about your process, how you find your out of state or your what we call like your out of farm opportunities for investment. Can you talk a little bit about that?
Absolutely. In fact, we even have a free training that we can give later about our remote investing. So that's a good question. It's usually everybody's first question is, I'm sorry, but I've got to see it, touch it, feel it, smell it, and be there. And we have systems in place that we've been using, for 2 decades that we don't need to go. We haven't even been to any of our properties. We were in front of 10 of them a year ago, but we never stepped foot in any of them yet. We are going to be going to our hotel in a couple of days, and that's going to be the first time we step foot in one of our properties. It's going to be fun. It's going to be historical, and we're going to video it. But it really comes down to processes. If you think about if you needed to get a contractor in your current market, You wouldn't go outside and shout out loud and have them come, hey, I need a contractor. You still go online, you still make phone calls, you still do all of those things. You're just, possibly 1,500 miles away from it instead of 15 miles away from it. And we have a lot of different checks and balances in our system. So, we have our realtor or our broker is involved, our property manager is involved, the contractor is involved, but we also have third-party inspectors that are, for lack of a better term, on our payroll to go inspect stuff in a non-biased way, and they don't have any relationship to the contractor. So they're just talking to us about what they're seeing, and that's how we keep the contractor honest. So there's so many different tools that we use to make sure that when you're doing a remote market, you've got to understand a couple of things, and because there's a lot of markets out there right now that the rents are actually going the opposite direction, and then there's markets where there's double-digit improvement in rent growth, and those markets are the ones that have the strongest job growth. If you think of things of places like Tennessee is one that comes to mind, where they have a lot of job growth happening. So when job growth is happening, it's attracting new employees into the market, and then that drives a demand for rental properties. And the first thing you need to look at is what's the base price for like a starter home in that market. And if that price point is above what the general demographic, the basic demographic can afford, then you're in an opportune zone for rentals. And then you next look at, well, what is the rental inventory? And so there's a lot of different ways that we teach how to really just hone in on what the best kind of market would be to get in there. And you also want to make sure it's landlord friendly laws. So there's kind of like a little science to it, honestly. And we teach it in an A to Z manner, so that you get yourself into a market that makes sense for you versus bumping your head against the wall in a market that you've just been trying for years to make a profit in, or even try for years to get into. It's a science. We've got it down. And then there's some artful things that we use, some Marco Polo apps on our phone where we can video conference and actually have people check in with us, plus FaceTime or Duo if you're using your a non-iPhone. There's such a big, robust process that has checks and balances that we teach you. And a lot of people they can't wrap their mind around that at first, but once they start to see that it's possible and they see stories where it's happened, they start to believe it a little bit more. And then they start to get a little bit willing to be uncomfortable and try it. And the next thing you know, they've got 282 doors, right?
That's amazing.
One of our, it's funny, one of our students, Denise, when she started with us, she was already an investor. She had a couple of duplexes in New Jersey, and she was self-managing, and some of the stuff of nightmares eventually. And she didn't want to continue doing that. And also Jersey is expensive where she lived, and so cash flow wasn't really very attainable, bad returns. So she wanted to learn how to do it out of state. That was actually her reason. Most people reach out to us because they want to learn how to do multifamily. The remote thing just ends up being part of that, but she was like, no, I need to learn remote specifically. And it was, I don't know, 9 or 10 months ago, I saw her do a Facebook post where she was talking about an 18 unit that she had under contract, and she was doing updates, and she was talking about how I got it under contract, I went through due diligence, I had to back out of the deal, and here's why. She was really adding value to people so they could understand like what she was going through. And she said, it's actually one of the things that I wasn't expecting is I found that it was a lot easier for me to back out of this deal when the numbers didn't work, because I wasn't emotionally attached to it the way I am when I'm there in person. And I was like, oh, I've always done remote, so I've never done it in person. So I didn't have that comparison. But she's like, yeah, it was really easy. It was just a numbers decision, because I wasn't, I didn't go hug the property.
Yep. You're not emotionally attached. Yeah.
Wow.
Yeah. Was that helpful? I was going to say, I don't know, Paul, if that answered your question, but it's hard because, Paul, you live in California, right?
I do.
Or do you?
I do.
Okay. Yeah. And I know, just because I know Janice and I know Maurice, and Janice is in Southern California and Maurice is in Northern California. And many of our students are in markets that are just like, it's just very difficult to do positive cash flow there. And so it really becomes, to your point, Paul, it becomes the difference between never investing and literally leaving your future up to, hopefully your employer does okay with your 401k. Hopefully Social Security holds, who knows? But that's what they're left with if they don't have a way to go invest and build wealth for themselves for their future somewhere else. And I think that's part of why we're just really passionate about it, because we know most people don't realize it's a thing And so they're limited, and literally their life, it's like their life and finances are being controlled instead of them being able to take control. So it's a big deal for us to get that message out so people know that there is an option. And sometimes it's investing passively in someone else's deal, and sometimes it's you're the active one in the deal, but it's very manageable. I mean, Janice was I've had several calls with Janice, or text messages back and forth, and like I have to keep track of where she's in Mexico, then a couple weeks ago she was in London, and she closed on a property while she was in Greece, but it didn't matter where her physical body was. And same with Jen and I, we've never closed where the property is. We close wherever we are. Jen closed at a poker table once. We're on a 2.5 month long road trip right now. So if there's a closing while we're on a road trip, the mobile notary will just come to wherever we are. Those processes that allow us to lead a team to project manage instead of being there to self-manage, and we're managing other professionals, business owners. That's what allows the possibility of doing it remotely.
And I mean,
it's like once you've done it once, you're like, oh my God, this is so much easier than I was thinking it would be. But it's just because we all grow up for our parents were buying a house, we were driving in the back of a realtor's car to go look at those houses. And that's just what we're used to. And once you no longer have to be doing the thing you're used to, then you're free to do what makes sense financially.
I'm going to drop a link to our training. I think it's like a 20 or 30-minute training.
Is it the remote investing?
On remote investing. Cool. I'm going to drop the link in the chat if that's okay, Annabelle.
No, yeah. While you do that, I'm just going to open it up to any questions from anyone on this call. Any questions?
That was and I thought that was a great share, honestly, because what Jen and Stacey are kind of talking about here is something that average investors are starting to understand, that and especially if you're in California, where you don't have a high cap rate, you don't have a lot of high cap rate marketplaces to really go invest dollars. You're really having to go out of state to look at, well, what else is happening. And they raised some really interesting issues, which was migration. And they were talking about, employment growth in those locations as a key driver that they like to look at. And that's really important because, we all know that, if you have jobs, if you have opportunity for people to earn a living that's starting to grow, or maybe it's growing massively, then that's going to drive your housing. And they were sharing that in their points, such that if anyone's on this call right now not really sure about where is that next investment going to be in real estate, maybe that's a great place just to start, is Googling or doing a search on where are the growth trends in terms of migration. Like, where are people migrating to? What does that look like over the past 2 to 4 years, 2 to 5 years? And is it sustainable growth? In other words, are people going there because there's opportunity? Corporations are moving there to supply jobs. Are there some kind of key benefits to taxes and things like that? So when they were talking about migration, that's a really great issue. It's a really great point. And when they were talking about the other thing, which is that in certain markets, rents are going down, and in other markets, they're actually stabilizing, if not going up. Well, I've noticed the same thing, because I'm in California, Arizona, and Chicago right now. And in some cases, Chicago has been somewhat relatively flat, but I can say that Arizona has actually been continuing to grow higher. Well, if you look at the migration trends that they were talking about, that they were just sharing, the migration trends have shown that Arizona has received a large influx of migration, because there's been a lot of companies that have moved into Arizona. The semiconductor industry is moving into Arizona right now, whether people know that or not. That is a very big deal. And in turn, that's driven the housing, that's stabilized the housing trends, that's stabilized rental growth. So I thought those points were excellent.
That's actually really interesting, Paul, because Arizona is going through the same thing it did about 30 years ago. About 30 years ago, there was a boom of semiconductor. I moved to Arizona myself. I left California. The real estate industry boomed there. That's where I first started learning about things and understanding that was something I wanted to get into. Then I ended up moving back to California. Arizona continued to grow, and it's still up there. One of the things that you just mentioned about the migration patterns, if you look up like all the van lines, the professional van lines, it will show you where people are migrating, where they're moving from and where they're moving to. You can also look at, because that's people who can afford a private mover, but you can also look at U-Haul and see where are people renting U-Hauls to. And there's migration maps out there for every reason. One of the other things that I would love to throw out there as a nugget too is that when you think about the sustainability of it, Amazon is huge. They're obviously killing it and having a monopoly in terms of retail out there. So where are they? Semiconductors, same thing. There was a national shortage on chips for a while there during COVID. Another thing is that in 2030, they're saying they're going to pass the law that no more gas-powered vehicles can be made. It has to be all electric. So where are those being made? Who are the best? Like the Nissan Leaf plant in Tennessee, Smyrna, Tennessee. I'm not saying anything like I've researched or anything, only a little bit, but I would check that area out. And where are the plants that are going to be making these cars in order to make that happen? So I try to look out that far in advance and see where might we see this, a market that might be in a phase 2 buyer's market, right? Before it starts to climb and you're getting in there at amazing prices. And by the time 3 to 5 years goes by, you're cashing out in basically 7 figures. And that happened for us in Indianapolis. So we take that similar approach. Look at the migration patterns. I encourage you to look at it every 6 months. It'll change. It'll definitely change every 18 months. And right now there's a lot of migration out of California for the past 2 years. Heading to Florida, the I-4 corridor is a great place. It's booming, it's growing, lots of new construction. But Paul is dead on accurate. Everything that we look at, those are the driving factors that tell you not only if a market is a good market, but are you going to see rent growth there? Or are you going to see it just stay flat? Because when you're getting into a deal, if you don't have any meat on the bone, any upside potential, you got to know that. And you have to analyze that in your underwriting. So Paul, you're absolutely on track with that. Annabelle, I also wanted to offer a copy of our book to everybody out here because there's a 5-day workshop in there. I can't remember how much it is. I think it's like no more than $47, and it literally helps you launch. So I'm going to drop the link in here. You go through there. It's a 5-day workshop. It's basically our A through Z format for like $47, and there's a workbook that comes with it so that you can get into action. And we want to give that to Annabelle's crew.
Absolutely.
Everybody here.
You're going to put it in the chat? Okay, great.
I just did.
Yeah, the ebook I think is what?
Like
$5.
The ebook is $4.97. If you want to get the physical copy, you can get it on Amazon, but we don't make anything off of it. We literally just had Amazon put it out there for reach. But the ebook is quicker for you to get, and it also comes with the 5-day workshop. And I think there might even be a calculator in there. I'm not sure what's all in there. I really don't.
They're like little upgrades. There's calculators like for $17, and then there are workshops in there for $47. But the thing about the ebook that is better than the Amazon book, one, it's cheaper, but we actually have some bonus trainings in there that our team put in Kajabi. So just some extra resources for you guys.
Absolutely.
Yeah.
Well, there you go. Whoever's on this call, I think
that's great. Thank you. Yeah, that's awesome.
Yeah, absolutely download that and attend. All right. My
What's
goodness,
the name of the book again?
It's
the name of the book is Multifamily.
Mm-hmm.
It's Multifamily Freedom Hacking, your playbook to long-term cash flow. It's long as hell. I'll type it in here for you.
Multifamily Freedom Hacking is like the main name, and then this little sub name is the all the
Multifamily Freedom Hacking. Because you're hacking into location, time, and financial freedom.
Perfect.
Thank you.
Very good.
Absolutely.
So you've got some of your students on this call. Can they share an experience, like what they've, kind of what they've done and where they're at from this program?
Janice
or Maurice, go ahead.
I mean, if there's anything you want to.
I can start. I actually, I've been in logistics for almost 40 years, and just retired last July. Started the class in 2021, started the academy, if you will. And we were in the middle of an acquisition with our company being purchased. So once that sold, I kind of dug down and got my first deal with one of the other students in the academy. And we did a duplex. As a matter of fact, we're looking at selling it. It's for sale right now. We've got a couple offers in after a year. Yeah, my background's all been operations. So at first I did a lot of passive investing. I was a JV partner on 7 deals, 7 different properties. In the last 3 we have, I'm the operator, and I work with some other people that are trying to learn to be operators. So I kind of sit on calls with them, and then we discuss different things, and eventually I'll let them take that, and I'll go on to I'll continue on with the others. But Stacy and I are work together on the larger property, and so that's takes up a lot of my time, if you will. It's pretty big. It's very stable now, and for me, I think the larger properties are easier to operate. You can have a vacancy or 2 vacancies, yeah, and you're not pulling your hair out. But you have smaller ones. You have 2 vacancies. That's 80%, 20% of your income. So, but it really is about networking. I've grown a huge network just in this academy, and then it continues on. You meet other people, and they're constantly reaching out to see if we're interested in investing, and we get deals coming our way. We formed a company. There's 3 of us that are in this academy, or partners on 3 properties, and we continue to look to scale to different levels. But it really is a process-driven training, and if you follow the process, I sold real estate way back when, but I know more through this than I did through just going through real estate.
So are you currently, are you looking for property, or is someone in your team looking for that and you're in charge of other stuff?
Well, we have one person that Andy, he is a capital raiser, and Brad, who is he usually gets a lot of the deals. Sometimes they come to us and we put them out there for our team to underwrite. But Brad is very creative with financing. We've had some pretty good, last couple of deals have been pretty good on the financing. So we all try and find them, but typically my head's buried in operations, so I'm probably not one that's going to go out and research that. But Brad and Andy have got a lot of contacts recently that we're getting deals pretty quickly.
That's awesome. Fantastic. And I guess, so you guys are working together within your group, correct?
Correct.
Do you guys extend opportunities to other people for investment into these properties?
Oh, absolutely. I mean, all of ours are we have, the last one's a syndication, so there's quite a few LP, but we do have between Jen, Stacy, and the 3 of us, we are general partners. Mm-hmm. But we do have, right now we're looking for larger properties, so chances are they'll continue to be syndication. But in the other properties we have brought in other JV partners.
Fantastic. That's great. Thank you. All right. Any other questions? I mean, I think you guys have done such a great job explaining everything here. Nope, no other questions?
Yeah, I kind of want to get a little more clear on what her title as far as operation, what it all entails.
Good question.
It's really we're really called asset managers. So
okay, well, all right,
the asset.
All right, yeah. I got it. The terminologies I wasn't familiar with.
That's my operations background.
All right.
Yeah, it's funny because that is something when we're talking just conversationally, we do talk operations because it's like to us it's operations, but it is different than when you're running like I'll call it a regular business. Operations is you are in there and you are hands-on. So that's true. I didn't even think about Janice. Oh yeah, asset management. but you're leading a team. And it's interesting because with Janice and Andy and Brad, that team of three, like they have a very interesting combination of skill sets that create like the whole, like they have the whole thing. And Brad Janice is right. He's very, very good at the, negotiating with people and building relationships and the creative financing. Like he's really good at that part. Andy is like this phenom at relationship building. He just is so good at, so his ability to go in and raise capital is just such a natural thing for him, but it didn't feel like that for him at first. He had a lot of mindset blocks about, I'm asking people for money, as opposed to offering people an opportunity to get into a deal they wouldn't have got into otherwise. Now he's past that and he's able to really help people that their money is literally losing money every day because, the value of money goes down and you're not in something. So he's really found his niche there. And Janice's operations background, part of what made Jen and I want to get involved in that deal with them was Janice's operations background is so substantial and so significant that I was like, it's going to be really fun to see like what she does with this 96 units. There's a lot of opportunity there, but it does require, if you're going to maximize the income of that, it requires like time and attention and paying attention to the details and truly leading the team. When one of the big differences between 2 to 4 unit multifamily and apartments 5+ is the way that the properties are valued. When you get into apartments, they're valued based on the net operating income. So if you are not good at operating or asset managing the property, literally you're driving down the value. The opposite is also true. And because we haven't gone out publicly to all of our investors with what our numbers were for the last quarter, I won't give any specifics to this. But earlier today when I was talking with Janice and she was like running through the numbers for our first quarter of operations that we just wrapped up, I was just like, I'm impressed as hell. But I know what it is. I participated in the first couple of months of weekly calls with the property manager. And I saw every single time she was on top of what units, what's coming up for lease. Are we bumping up the rent? How much, how close to market are we? And she literally, through her operations style background, drove the revenue much faster than we were anticipating and drove it up way faster than we thought could even be. But it was because of her consistency, and she took her career skills and applied them to real estate in a way that she's just really freaking good.
Yeah, and I think that it goes hand in hand with how we tell people, go slow, manage your asset because you're the only one that will, so that you don't get yourself in a situation where you're not having the asset perform and then nobody wants to invest in your deals anymore. So it's super important that you find what you're good at, stay in that lane, and surround yourself with the people that are better at the other areas that you're not so great at, or maybe you're okay with it, but find the lane you need to be in based on your skills. And Janice really found that, and so did Andy, and so did Brad.
Yeah, but know the whole process.
That's why she did 7 different properties. Yeah. So she knows every role.
And is this without actually physically being at the property?
No, I actually went to the property during the inspection, and part of the reason is, we have 30 people that are entrusting us to run. For me, it feels more comfortable. Right. But I just felt that this was one of our biggest for us properties, that I wanted to go out and meet the team that worked there, meet some of the tenants. I went through the inspection, walked through all 98 units, but I thought it just gives me a better understanding of the property. So when I'm talking to them, I ran large distribution centers, and what I would say is an asset manager can't limit themselves to just reducing costs, because there's top line growth, value add that you can do. And I didn't realize that until I got into a private equity, a company that was owned by private equity, because they didn't care who you are. You have to do, raise the revenue and reduce the cost. But a lot of times people are just focused on reducing costs and in this 96, the one thing is that we realized that we knew going in it would be a little difficult to hit some of the performance numbers, but we grew the top line, so we actually improved overall to the on the cash flow.
Hey, Janice, I need you as a partner.
There you go.
We
There
all
you go.
need a Janice, right?
Yes. Yes.
Yeah,
So,
Janice is going to be a very hot commodity, but the thing is, she doesn't need to. She doesn't actually need any more units.
I know.
I don't see that she's not going to get any, but she's like, yeah, I'm good.
That's
Yeah,
awesome. No, this
she's
is
really, really talented.
great
It's fun.
information. Definitely great information shared. Paul, any other questions?
No, I mean, I think that I took away a couple additional nuggets from that last share that, in addition to the migration, sharing about the private, you know, uh, moving services or even U-Haul, there's a couple nuggets right there.
Yeah.
Anybody could look up our moving companies hiring our in just simple Indeed.com or any of the job boards. So looking at verifying moving migration through what is the moving activity that supports all that, right? Because nobody just moves themselves. These days it's not uncommon. So you would hire a company or a U-Haul or a combination of both, maybe. And so just more great nuggets. So I just wanted to thank Stacy and Jen for being on the call. I got to see them a year ago. I thought they were great today. I thought they were even more fantastic this time around than the last time. So thanks again for being on the call. I thought it was excellent.
Oh,
Yes, thank you. Even
Paul.
though we
Thank
didn't
you.
get to see you guys live, we get to see your picture. But still, I mean, it's always great to have you guys. Yes, there you go. It's always great to have you guys. You guys definitely have a ton of information and just wow. I mean, you share a lot. So thank you guys for being on my call, and I hope to have you guys on again sometime down the road. Again, everyone, yes, everyone. This is a call. Like I mentioned, we host every Wednesday. It's 2 p.m. Pacific Standard Time, and it's just a platform that, you know what, it's come share any multifamily info you have, deals, if you're looking for partners, if you're looking to buy, whatever it is. I think that this call will have people that are definitely interested in being a part of and joining groups. So thank you guys. Have a wonderful week and good luck out there. All right. Take care.
all right. I'm in the Georgia area, Annabelle. So if you guys are interested,
What area?
Georgia, Atlanta.
Georgia. Okay. Well, why don't you put your info there on the chat? I have put my information there on the chat as well. And if anyone wants to put their info, I think this would be great to save and connect with people after the call.
Fantastic. You guys have a good day. Thank you.
All right. Thank you. Thank you. I'm gonna save some of this stuff before we go. Cool.
It's an Indianapolis number, so don't get thrown off.
Okay, perfect. Let me know when you're
Did it come through?
Nope, has not come through.
Okay. There you go.
Oh, there we go. Okay, perfect. Let's okay, cool. All right. Have a wonderful day, everyone. Take care.
All right. Thank you.